Bloomberg Audio Studios. Podcasts, radio, news. This is the Bloomberg Surveillance Podcast. Catch us live weekdays at 7 a.m. Eastern on Apple CarPlay or Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Miletti with us right now, head of active equity in Milwaukee with Allspring Global Investments. All the value heritage is strong over the decades as well. I'm going to cut to the chase. People that like the New York Yankees would kill for the adult responsibility of the Milwaukee Brewers. The Brewers are 23 out of 30 in payroll. Their total payroll is less than Juan Soto or Aaron Judge make. It's like the capital of value. How do you get Milwaukee Brewer performance in the stock market?
That's a great question, Tom, and we're working on it. I would say that's exactly where our managers are focused, is outside of the Mag 7 and probably the popular areas of the market. We are continuing to search for where the value lies.
Like where? Give me a sector.
Yeah. From a sector standpoint, I think, one of the most probably hated sectors has been healthcare. I think there are some real attractive areas in diagnostics in the tool space. I know there's been regulatory pressures and uncertainty in pharma and in healthcare services. Those are, less favorable areas for us. But as we think about change in the future, I think the diagnostic space looks pretty attractive.
I mean, David, I got UNH off the bottom. What a train wreck that's been. It's up 28% off the bottom. It's not even anywhere near breaching resistance.
And how
that
should
was stock talk.
I appreciate that. And how should investors look at or think about valuation? You mentioned it just a moment ago. What is it an indicator of? How should they be thinking of it in this broader context?
Yeah, it's a great question, David. Look, when I look at just the market averages and valuation, it is not lost on me that we are near historic highs on almost any valuation metric. But when you search underneath the broader markets and you look at relative value in certain sectors and certain areas, even market caps and different regions, there still are attractive areas. And that's what we're kind of looking for. And, it's not necessarily contrarian. It's just relative values to the overall market that appear to be, hanging back and looking attractive to us.
I'm very curious as to how you're thinking about the policy picture, the background to all of this. And there was, at the beginning of President Trump's second term, a lot of anxiety and apprehension about the way that this tariffs policy is going to affect a lot of these companies. As you've sifted through earnings reports and listened to calls and thought through this now with, a couple of months hindsight, what have we learned about how much weight these tariffs, this trade policy is actually having on a lot of these companies?
I think we haven't seen the full effect yet. And when you listen to conference calls and when I talk to our portfolio managers, it's clear that company managements are still trying to figure it out. I think it's been less impactful than they had thought it would be. But there's a timing issue, right? Where, people built up inventory ahead of time. That inventory has been worked down. There's been pauses in tariffs along the way. Consumer behavior has adjusted for it as well. And so I think, the jury's still out on how much impact they still have. But to your point, It's been less concerning than I would have believed it to be.
How do you respond into Q3 here and into Q4? I don't want you to do the securities analyst bit, but how do you respond to the idea that the growthiness stocks will grow the denominator and catch up to a value 3 years out, 4 years out, 5 years out? How do you respond to our new terminal value of Mag 7?
Tom, it's a great question. And look, I would have.
I'm keeping track. I've got little hash marks here. We're doing all right.
It's the $1 million question in some ways, because in where I've been wrong in many cases, we haven't been absent the Mag 7, but I had thought for some time that you'd have the rest of the market catch up sooner. And the reality is that the cash flow production from those Mag 7 have been quite good. but the law of large numbers does come into play at a certain point, and we've seen some hiccups along the way. The CapEx cycle plays well. I think I saw a statistic too that said 60% of the revenue stream from the top 10 names in the S&P come from AI. And so they're very AI dependent.
Okay, you got a stunning track record in the Allspring Global Dividend Fund. And at the top is NVIDIA, Microsoft, Broadcom, the usual victims as well. You got UniCredit down below. It's a global fund, it's an Italian bank. Are you leavening in the Miletti stocks into Mag 7 portfolios?
I think that's exactly what you have to do. It's about risk versus reward. And while you don't want to be absent some of those names that do have strong fundamentals, including the Mag 7, you do have to diversify the risk, especially at this point in the market. The market, is not priced. Is priced for perfection in some ways. And, you want to diversify your risk, and you have to do that outside of those names.
Tom talks about leavening, and I'm curious just how much dollar weakness is affecting the overall picture here, especially when you look at stocks like Tom brings up, this Italian bank. Yeah. Is it making stocks like that more appealing, less appealing? How's it shaping your kind of wider aperture of investment now?
For certain, dollar weakness has been a tailwind for international and EM stocks. And it is a theme that we stressed late last year, headed into this year, that we believed that would be the case, just given tariffs and other things that we could see coming. I don't think it's over. You could have a bounce in the dollar. I would expect that to happen. But I do think the peak in terms of where the dollar has been is probably behind us, and you're going to see some of that tailwind continue for the EM and international space.
Miletti, thank you so much. Head of Milwaukee Brewer Baseball, Active Equity, Allspring Global. Thank you so much. Stay with us. More from Bloomberg Surveillance coming up after this.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Right now, it's important. Nancy Tengler, talk. People do. Nancy Tengler does at Laffer Tengler, where she puts money to work. You have the most twisted portfolio in your ETF, up 24%. You're getting NASDAQ response from a much more cautious portfolio. You have the tech company JP Morgan, the tech company AbbVie, the tech company RTX. Here's one, Home Depot. You got the strangest portfolio going. How are you getting the results you're getting in TGLR if you don't own NVIDIA?
Thank you. That is so kind.
No, but I'm serious.
Well, I own the poor man's NVIDIA, Tom, and that's Broadcom. And that's been a workhorse. And
so that's the secret, is buy the poor man's whatever.
Yeah. And then Oracle, the poor man's hyperscaler. So we're focused on dividend growth in that portfolio. We have a growth portfolio that owns all the darlings like NVIDIA, Palantir, blah, blah. But this strategy is a workhorse. And it's over the last 10 years, it's just kind of 13.5% annualized with 3 bear markets. So I learned it from the great Tony Spare when Art Laffer owned a piece of our company, and we just focus on valuation, and then we do the work, the research.
You mentioned Oracle today, a big day for Oracle announcing earnings after the bell. What are you looking for there? We were talking earlier just about the need for cloud computing because of AI. Lisa giving us a brief on a Dutch company that's doing business now with Microsoft. What does Oracle have to prove when it has that call today?
They need to continue the sales growth
trajectory,
hitting the numbers. Yeah, and they have a huge backlog, but the company is pretty spotty on hitting their numbers. So if we get a sell-off, we've been trimming it back because it's become a huge part of our portfolio. If we get a sell-off, we may step back in. But it's the company that everyone loves to hate, and the CEO, or now the chairman, that everyone loves to hate. He lives where I live, up in Lake Tahoe, and he's something else. Second wealthiest man in the world.
Nancy's doing it right, Tom. Between this portfolio and the Tahoe residence, I feel like we could.
Continue, David.
You mentioned the history, the bear markets that we've had. Here we are in this bull market, and I wonder sort of where you think we are in that as you survey this market today, as we note day in and day out the records that we keep coming close to or hitting. Your sense of how long that's likely to continue and the indicators that you're looking to that will give you some sense of that.
Yeah. So, David, I've drawn the analogy to the 90s when I was not just alive, but I was managing portfolios. And there are a lot of similarities. We had high inflation, 3%. We had a higher 10-year at 7 to 8, and the Fed funds rate 5 to 6. So what we know is when productivity is driving growth, you can sustain robust stock price performance for some time. We're just young in this new bull market. The 90s had 120-month expansion with over 400%. But what's important to me is that we saw better than expected revenue last quarter. So the earnings were great, beat estimates, but revenue beat estimates. And then we're seeing cash flow, free cash flow at corporations at $4 trillion. That's a historic high. Margins at historic highs. And then we've got the tailwind of the one big, beautiful bill. We call it the Obubba bill at Laffer Tengler because I feel dumb calling it the one big beautiful. But the tailwinds are huge for corporate cash flow, tax savings, cash, and no one's talking about that.
I want to get you in trouble. I've had some wonderful conversations with Art Laffer. I think he's been criticized in an uninformed way. We've talked about the tangential dynamics, first and second derivative of the acclaimed Laffer curve and that. What does Laffer and what does Tengler think of Trump fiscal and monetary theory?
So I think Dr. Laffer is always diplomatic.
Yes.
And as a former member of not just Reagan, but Nixon and an advisor to Trump 1.0, I think they're doing a lot of things correctly, but I hate this takeover of private sector companies. And Dr. Laffer's come out and said, well, if anyone can do it, it's President Trump. And that may well be, but I think it's bad precedent. And I think they're overstepping the executive.
Then respond to the gloom crew that says there'll be a jump condition where the smooth curves of our equity bullishness break. How do you invest given the shock potential of a Trump policy gone wrong?
Well, we'll do what we did in April. We'll buy more. So we were stepping in on April 3rd, April 1st, end of March, because you see these dislocations and you say, is the AI trade over? It isn't. I've heard so many people say, oh, well, there's that MIT study. Nobody's making money with AI. That is not what we're hearing from the companies on the conference calls. We're seeing margin expansion. We're seeing less hiring, which I think is a paradigm shift that is distorting things like the ISM manufacturing numbers.
David, get one more in here, but I want to make this clear, folks. People look at Nancy Tengler and they're like, she's out at Lake Tahoe, like a starter home near Homestead is like $12 million. And she's retired. How many hours a day are you working?
Me, I work about 12 to 14.
It's like mental. Wow. She's as nuts as she was when she was a kid without Laffer. Get one more in here.
He's nuts. He's 85. Says he's going to live to 130.
I can't resist going back to something you said, which is that you are wary of, or you don't like the fact that the government is getting involved with these private companies. What does it mean as you sort of think through the ramifications of this? If you have the U.S. government taking a stake in Intel, what does that do to your or an investor's appetite for that company? Does it provide a sense of security that the U.S. government is getting involved? When you hear Dr. Hassett saying, this could happen with other companies in other sectors, how does it sort of shape your outlook, knowing that this might be something that would be more regular than it has been before? You
got to study history. I mean, I was alive. I wasn't managing money when the Chrysler deal, where we bailed them out for $1.5 billion, Jimmy Carter, 1979. Then we had to bail them out again, and that was in 2008, 2009 for $12.5 billion. It doesn't work, and there's nothing in it for the taxpayer. So what happened to Intel shareholders? They got diluted. The government also has warrants. So that could further dilute them. And they have no business. They're not good at it.
Right.
Obama, Solyndra. I mean, I don't know what else to say, but it's bad. Bad policy. Very bad.
Nancy, don't be a stranger. Nancy Tengler, thank you. I could see the remote. She'll do a remote in Lake Tahoe. It'll be January. We'll be out on her deck.
I'd love that.
Be 42 below zero. Nancy Tengler, thank you so much. Huge performance out of some of her ETF portfolios. Check that out. Stay with us. More from Bloomberg Surveillance coming up after this.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Joining us from Trinity, the PhD in economics, Colin Hunt. Would you like to chime in, sir, on U.S. economic data? Can we avoid that this morning?
I think the U.S. is at a very interesting juncture. You obviously have an increase in inflation pressures. The signs that the labour market is weakening. So this is a uncomfortable moment for policymakers, I suspect.
We welcome you from Allied Irish Bank. Colin Hunt with us here, and of course with all of his Trinity economics. Let's first identify AIB right now. Is it safe to say you're owned by the Irish government? How do you answer that question?
We were owned by the Irish government. The Irish government came to our rescue post the GFC, and for a period of about 15 years, the Irish government had a presence on our share register. And in June just gone, we marked the Irish government's exit. And once again, the organisation is 100% privately owned. And in fact, one of the reasons that I'm here this week, we had a Barclays Financials Conference yesterday, meeting a lot of our investors. Most of our very significant investors are based here in the United States.
Well, this is very important. We'd like to have some news here. Jennifer Dugan's waiting in Dublin for this. Can we suggest there would be some form of public offering of shares of Allied Irish Bank in the coming weeks, quarters? Can you make an announcement today?
There's certainly no announcement to be made because we're 100% free floating at this stage. So the government has exited the register. They came to our rescue with about almost 21 billion euro. We repaid that, and now we are 100% privately owned.
This started well.
It started very well. Dr. Hunt, give us some perspective on sort of the appetite for cross-border transactions at this point in time. So here we're living this day in, day out, the kind of ambiguity or uncertainty about trade policy and economic policy more broadly. What do companies domiciled outside of the United States think of this environment, and how's that affecting business as you see it?
Well, I suppose the environment, we had a period of uncertainty earlier on this year, and very, very warmly welcomed the fact that we have come to an agreement between President Trump and President von der Leyen, which was announced in Scotland a few weeks ago. Business, as you know, hates uncertainty. We have certainty now. Would you pick a tariff level of 15%? You wouldn't necessarily, but that's the reality. That's what we're dealing with, and at least the uncertainty now has been eliminated. The United States is a hugely important market for Ireland. Not only as a source for our exports, but also as a place where Irish businesses invest. So typically Irish businesses, when they outgrow a market that is growing quite robustly, but still quite small, they typically go to the UK first, and then they go to the United States. So that was the path we followed. We've been here in New York for 50 years this year. And we still, all the way through the crisis, we maintained, and all the way through our period of government ownership, we maintained our physical presence here. It's a really important place from us from an investment perspective, but it's also a really important country for deployment of our loan book. And of course, other Irish businesses followed us as well. So you have the likes of CRH, the likes of Smurfit, Westrock, the likes of Kerry Group, all having very significant exposures to the United States. Notwithstanding the uncertainty we had earlier this year, it's still a hugely important market, and it's a hugely important provider of external capital.
How is the Irish economy doing today? When you look at the housing market, at commercial investments, what's the relative health of the Irish economy in 2025?
The economy is doing quite well. Like Irish GDP numbers, because of the scale of the international sector in the economy, can be wild and volatile. So we tend not to look at GDP. We tend to look at modified domestic demand. So this year we're talking about growth somewhere of the order of about 2.3, 2.5% in real terms. Unemployment, about 4%, and total employment in the state now running at 2.8 million. That sounds small, but when I was in college all those many, many years ago, 35 years ago or so, we had 1 million people at work. So this is an economy utterly transformed, and now one of the best performing in Europe.
Colin Hunt with us with the Allied Irish Bank, and we continue. We're commercial free with you across America. In Ireland, and around the world here through this important economic report in 14 minutes. Ed Ludlow's scheduled to be with us here in a bit on the important Apple meetings. I was talking with Olivia Fletcher. She calls me up. Olivia calls me up. She goes, "Did I wake you? It's 3 a.m. I'm like, Olivia, time zones.
He's up.
And Colin, I got like an hour conversation with you, and I think, frankly, President Trump could have an hour conversation with you. Let's talk about the strange corporate boom in Dublin and the fact that people sophisticated like Blackstone are literally giving the keys back on office buildings. What is the state of commercial real estate in, as you say, a completely rebuilt Irish economy?
So the commercial real estate market had a very good run. And then once we had the turn in the official rate cycle, you began to see valuations coming back quite a bit. Of course, you had the COVID impact and the impact on commercial valuations because of working from home. That would have led to a downward adjustment as well. But we have seen quite a significant step back in valuations.
Is the market clearing?
I think the market is clearing, and certainly we're beginning to see signs of people of higher degrees of interest in the market. There are trades taking place. The valuation adjustment seems to be behind us. If anything, I would have expected that to happen a little bit earlier, because of the turn in the rate cycle. But I do think we are at the bottom of the cycle and through it.
A related question, perhaps closer to home. I'm wondering what your offices are looking like. I remember reading you're trying to get employees back 3 days a week. Some pushback to that, as I know there was here in the States with a number of financial institutions and other businesses. Here we are at the end of the summer, looking to the fall. Where does that process stand? Were you surprised by the reaction? Folks didn't want to come in 3 days a week.
You really didn't want to hear this question.
I will answer. There's no question I don't want to hear, and I'm more than comfortable in answering that. Look, we have a situation where we have effectively three types of work patterns inside the organisation. Our branch staff are in 5 days a week. Our call centre staff are in 5 days a week. Our security people in 5 days a week. We have some people who work from home 2 days a week. We currently have a group of people who work from home 3 days a week, and we're asking that group of our colleagues to come into the office an additional day. I think it is really good for culture. I think it's good for learning and development. I think ultimately it's good for the business.
Money question to Nicholas Booth at Stanford's wonderful work. You've given me the best explanation of this I've heard. Are you down the road believing that you're going to compensate people who are in 5 days a week versus the work from home crew?
Well, the contracts that people have lay out in great detail their base of employment. We're not. We incentivize our staff to come to work through a salary check that arrives in their account on the 25th of every month.
Just because of time, I've got to get to this. There's a back and forth on trade, and everything within Ireland with America and tariffs and Trump comes down to the pharmaceutical industry. Give us a state that Allied Irish Bank sees of, yes, the weight loss drugs I'm not using. Gura's just cut and chiseled.
Using heavily.
But help us with the pharmaceutical dynamic that will change given decisions by President Trump.
So some of the biggest pharma names here in the United States have had a physical presence in Ireland for over 50 years. Ireland is a very attractive location for US investment. Gives you open, unfettered access to the largest single market in the world, in the European Union, common law, English speaking, and we have, of course, a cultural and perhaps fraternal affinity with one another across the Atlantic. So we have very, very deep-rooted US pharmaceutical companies in Ireland. It's a big driver of our exports to the United States. We did go through a period of grave uncertainty earlier on this year, but I'm very, very happy that that has been eliminated now. We have some certainty in relation to tariffs in that sector.
Thank you for getting lie flat beds on Aer Lingus.
It's all his doing.
I used to be a director of Aer Lingus. I was a non-executive director.
You're the one that pushed it through.
I don't know who told you that, but
I'm sitting on Aer Lingus, and it's like Icelandic Airways back. And you brought an entourage with you. With Guinness too. Thank you. What is Aer Lingus? Is all of a sudden got a buzz to it, doesn't it?
Well, Aer Lingus had a buzz to it going all the way back to its privatisation, really in 2006.
But you got lie flat beds finally.
The lie flat. You need to fly more often with Aer Lingus. They've had lie flat beds for the best part of a decade, if not more.
Well, they have, but now they're really pushing it. Colin Hunt, can you come back again? Are you going to be in New York in the next 5 years?
I'll probably be here in the next 5 weeks.
All right.
Allied Irish Bank, and we said good morning to Boston that knew Allied Irish Bank years ago. Colin Hunt, thank you so much. Dr. Hunt of Allied Irish Bank, their Chief Executive Officer. Stay with us. More from Bloomberg Surveillance coming up after this.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.
David Gurian for Paul Sweeney. Lisa Mateo is here. She's been seen with a healthy breakfast, I should point out, as well. She has newspapers this morning. What do you start with?
Okay, we were talking about AI, so we're going to start there. We're going to go there. People beginning to use it more and more, right? So much so, OpenAI's Sam Altman is saying that people are starting to talk like AI. So he posted about it on X. He didn't say what particular terms people are using, but he did say they have similar writing styles. He says it feels fake. It wasn't like that 1 or 2 years ago. But I did an AI search about terms that make you sound like AI, and it says words like leverage, synergy, unprecedented, transitional phrases it uses, furthermore.
So I've got the new voice thing for perplexity here, and I'm going to type it in right now because this is the AI we need to know. When does Paul Sweeney return?
See if Perplexity knows Paul Sweeney.
Yeah,
they're thinking Monday.
They're thinking Monday.
Thank you, Perplexity.
That's what my people are saying as well. If that changes, you let me know.
Okay, you have people?
No, well, anyway, I think that all of this is leading to, I think, what could be characterized as AI slop. So if you look at social media now, I know you do, Tom, there's a lot more of these kind of, a lot of dog roll on X.
And that's what they're saying. It's all kind of sounding the same. Like it's just kind of regurgitated information.
Is it seriously, it's an unknown.
Yeah.
It's a huge unknown.
No,
Next, what do you
definitely. Okay, this is what we were talking about before. High school math reading scores hit a new low in the U.S. This is part of the National Assessment for Education Progress. You called it the nation's report card. So here are the numbers. So a record high 45% of high school seniors scored below basic in math. Nearly 1 in 3 seniors were below basic in reading. That's also a record. So this was given to students in public and private schools. The results were actually similar to those that were reported earlier this year for 4th to 8th graders. So it's not just the younger kids, but also the older kids that are in high school preparing to go to college.
Is it a pandemic thing?
They said it was lower before the pandemic, but it's just continued to fall. It hasn't kind of increased.
We're just, I talked to an educator the other day who said we're now beyond the pandemic. But at the same time, it's still
dealing with a lot of that residual stuff. Yeah. I'm struck by how much of this is still online. Like having kids now, math on the computer is an odd thing to do. And put the stylus down and pick up the pencil.
They do, but the SATs are online now.
That's right. Absolutely. All these year-end tests, including these that you're citing, I think are online.
They are online.
Next.
Okay, so we go from high school to college. And have you heard of Rush Talk? Okay. This is the sorority craze. It's coming from Massachusetts.
I've seen the documentary. I've seen the Bama Rush documentary.
Yes. Okay. So Rush Talk, it's part of TikTok that's devoted to sorority rush. And it's big. Yes. Down south. You have the documentaries. You have the Lifetime reality series. You have brand collaborations going on with these girls. But the Boston Globe, what they said was interesting is that the craze is coming from Massachusetts girls, not because they're doing it at universities in New England. They're going more to Southern schools because of crazes like this. Schools like in Georgia, Alabama. And the Globe took a look into what goes into Rush Talk. Okay, are you ready for it? Choreographed dances, which you've probably seen. $5,000 Rush consultants. So they need consultants in order to get all this done.
This is for girls to get into a sorority?
Yes,
in
Rush
the South.
Time, yes.
You have consultants at Bama to get into the
10-day
Chi
retreat
Omega?
you can go to.
Yes, I'm telling you. These girls are having mental breakdowns. There's scandals. There's spray tans gone wild. It's a little crazy.
Maybe it's linked to the test scores.
Maybe it's linked to the test scores. But it's a huge thing. I mean, some girls are making their decisions for college based on these things they see on social media.
Can we have a moment of silence?
Please.
Good morning to the Tridelts. Delta, 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 Boulder, Colorado, 1025 15th Street.
Okay.
I have an
Did they
ancient
give you a few
scar.
Gallic
I
shrubs,
have
Tom?
an
Is
ancient
that why we're
scar on my
going back
shoulder where after one too many screwdrivers, I fell into a rose bush.
All right.
It's a trial
on the hill in Boulder? I noted here there are 5 B's to avoid, according to this article.
Yes.
Boys, Biden, politics in general,
Yes.
bucks, booze, and the Bible.
Yes, because
Those
you
are
have
the
to
5
watch your
Bs to
feed
avoid
before
in the
you
rush
rush.
process,
You got to erase stuff from the past.
I mean, she looks
It's a whole
like
new
a
world,
KG.
Tom.
I mean,
Yeah.
she looks like Lisa looks like destined for
She
Kappa
doesn't have to
Kappa Gamma.
reveal.
Oh, goodness,
She
no.
doesn't have to reveal.
You could see it. Thank you, Lisa Mateo. The newspapers.
This is the Bloomberg Surveillance Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 7 to 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.